Welcome. So thank you to the organizers for this summit. Jordan and Wyatt have brought together an excellent crew here. And thank you to the space for hosting this excellent event as well. It's my first time at the space. It's really quite nice. Might move to Denver, Colorado. We'll see. Don't tell my wife I said that. Okay. So my name is Pierre Rochard. I'm the CEO of the Bitcoin Bond Company. I also serve as an independent board member for Strive. But everything today is really just my own personal musings. And you can follow me on X at BitcoinPierre. First, some disclaimers. So this is just for entertainment purposes. It's like, watching Jim Cramer late at night on CNBC. Nothing serious in here, but I'll let you decide what is or is not serious. Okay, so I think a big question right now is, what is a Bitcoin Treasury company? Raise your hand if you've heard the term Bitcoin Treasury company. Is that okay? Okay, very good. All right, so I'm going to start assuming some prior knowledge. I have a pretty opinionated view of what a Bitcoin Treasury company is. I think that it's one which is dominated by two things on its balance sheet. On the asset side, it just holds Bitcoin, and that's just in cold storage with a custodian, and it's just Bitcoin. On the claims side, you've got liabilities, so you've got perpetual debt or maybe convertible bonds. And then you have the common stock. And so you could look at lots of different companies and you could say, well, look, this one's like 98% a Bitcoin Treasury company, 2% software services business. And so I think that every company is going to be different in what percentage of it is a Bitcoin Treasury company or not. But ultimately, I think that the stock's performance has to be for it to be a Bitcoin Treasury company, the stock's performance has to be dependent on the performance of Bitcoin, but also some other factors that we're going to get into. This is where I really feel like it would be a misnomer to call Tesla a Bitcoin Treasury company. It's just a car company that happens to hold some Bitcoin. Just like we wouldn't say, like, if you told somebody Tesla's a computer company, they'd be very confused and be like, well, look, there's a computer in their car. It's like, well, that's just missing the point. You're not really using a very good label. And so when there's conversation about, oh, well, what's the operating company and what are the prospects for the operating company? Is it generating cash flow? Is it getting new customers? I actually think that's kind of just a distraction when it comes to a Bitcoin Treasury company. I think that the meat of it in terms of so first I want to start with really this presentation is about, in the abstract, theoretically, trying to decide what is a fair price for a Bitcoin Treasury company. What is the correct valuation, or approximately, for buying the equity in a Bitcoin Treasury company. Now, I think that where we have to start the analysis is what is the intrinsic value of it from a market perspective. So I see MNAV, which is the ratio between the market value of the company to the assets of the company, as a market price. And if it's trading above a 1x MNAV, it's trading at a premium to its holdings. If it's trading less than 1x, then it's trading at a discount to the Bitcoin it holds. We've seen, this is a chart of MSTR's MNAV, Strategy's MNAV, over the past 5 years since it adopted the Bitcoin Treasury strategy. We've seen a very wide range of MNAVs, not only for MSTR, but for other Bitcoin Treasury companies. But obviously, MSTR is the biggest one by far and the one with the longest track record. And it's really interesting to see that, by and large, it has stayed above 1x. There are times where it was below 1x. So in 22, for example, And then there's times where it really went up quite a lot. So it went over 3x its holdings at one point last year. And then recently it's been kind of sliding downwards. And so I think that, it's the same company, right? It's the same company. It's the same chairman. So you could question, well, look, not a lot has changed. So why is the MNAV moving around so much? So I think that if we decompose what drives an MNAV premium or a discount, but here I'm framing it as a premium just to ease kind of the thought process. Here are the different factors that I've identified, which I think adds up to 7 different factors. On the right, I have the percentage, which is really, these percentages add up to 100%. And so I'm just trying to establish heuristically what is the level of importance of each factor in contributing to having an MNAV premium or discount. So the first one, fast high leverage. So basically, and these are all forward-looking, right? So when you're thinking about a stock's valuation, you have to be thinking about what is going to happen in the future. And the past is only a guide. It can help steer you into what you think is going to happen in the future, but this is all very forward-looking. So do you anticipate the Treasury company to be able to lever up and to borrow more? The second is, what do you think is Bitcoin's growth rate going to be? Now, you might assume that that's irrelevant if your benchmark is Bitcoin, and we'll touch on that because that's actually the third factor, which is, do you think that, or how much outperformance do you require from an equity versus holding Bitcoin in cold storage? So if you wanted to just break even, you could set that to 0 in Bitcoin terms. But if you feel like because you're having to trust the management team, you're having to trust the regulatory system, you're having to trust a third-party custodian, maybe you actually want this to outperform Bitcoin. And so you actually need to implement a hurdle rate, which means that you're going to be less willing to pay a high MNAV, right? So now I put a minus sign there because it subtracts from the MNAV that you're willing to pay. Whereas the first two increase the MNAV that you're willing to pay at fair value. The fourth is path impairment, which is really about as this company is going to be paying out their cost of capital or the cost of the debt, right? The dividend rate. They're going to have to do some things, either raise some cash in some way or another. And if the Bitcoin price is going down when they're doing that, that could actually put some drag on the company. Even if, at the end of the day, Bitcoin does really well, the path that Bitcoin takes to get there does matter at the margin for the MNAV. Okay. Who's the IT guy? I was talking to him earlier today. Okay, so then you have the exit MNAV, which is when you're ready to sell, whatever your time horizon is. It might be 10 years, it might be 30 years. What MNAV do you think that you're going to be able to sell it at? And then along the way, you've got the accretive governance, which is, I think, actually gets a disproportionate amount of attention, which is the ATM on the common stock, right? The issuance of that for accretive purchases of Bitcoin. And then vice versa, if the company's trading at a discount to MNAV, are they doing stock buybacks and accreting per share sats per share? And then last but not least is the cost of financing, right? So if it's leveraging up, what is the cost of that leverage? I actually think that it's actually not that sensitive, and we'll take a look at that, why I think it's a small factor. Okay, so I think that the leverage is the most important part driving kind of the MNAV premium or lack thereof. And so you see here that at the top, we've got different levels of leverage. So at a 0% leverage, what is fair value for a Bitcoin Treasury company? And here you're assuming, the assumption is, I don't think they will ever lever up. Okay, so it's not just because you're not saying that today they're at 0% leverage, and so here's the maximum MNAV I'd be willing to pay. You're also saying that I don't think that's ever going to change. Now, if you think that over the coming years, they're going to be able to lever up to 25%, to 37%, to 50%, then the MNAV you'd be willing to pay today increases accordingly. On the vertical, you've got what is Bitcoin's expected growth rate going forward. And so the growth rate actually doesn't really matter very much if they're not levered up. If they are levered, then the growth rate matters a lot because the common stock is going to capture the value between Bitcoin's growth rate and the cost of the financing. And so that's where you can get to some MNAV numbers that might appear high. So there's a tremendous amount of urgency in being able to lever up. And there's also, I think, been difficulty, for example, with strategy, not because of strategy, but really I would argue because of the market. I think that the market needs lots of education to understand how to price the risk of a levered Bitcoin company and how to, and part of the question too is a distribution question of how to get these preferreds that are yielding like 10%, which is just far greater on a risk-adjusted basis than anything else out there. How do those find their way into the world of fixed income and take market share from alternatives? So the slower the levering up is, then the lower of an MNAV multiple you would be rationally willing to pay for a company, and vice versa. The target leverage ratio also matters a lot. So if the Treasury company is targeting 50%, that is materially higher than if they're targeting 25%, even in the rosiest scenario, right? So it does matter. Now, I think that there's also at the extreme, you could imagine that if they're over-levered, their TV stops working. If they're over-levered, they're going to be paying high dividends, and that they're going to... oh, okay, I see. It was my fault. I didn't click fast enough. Maybe I should speed up the presentation a little bit. Okay. So there's diminishing marginal returns to leverage. I mean, really, there's negative marginal returns to leverage at some point. It's still early days, so we'll see how that is. The next factor is, what do you think Bitcoin's growth rate is going to be over the relevant time horizon? And so this looks at the 5-year rolling Bitcoin CAGR. And so you see that it's pretty good. Now, with some caveats, right? Which is that if you bought Bitcoin in December of 2017, and then you sold it in December of 2022, you bought it at 17 grand and you sold it at 17 grand. And so that's how you get to that 0% CAGR there, which I would argue is really the exception rather than the norm. And so for the most part, Bitcoin's CAGR has been north of 20%, north of even 50%. And so that is really, it's really important if you're going leverage long Bitcoin, your willingness to pay for that leverage is going to be dependent on how much you think Bitcoin's going, or how well you think Bitcoin's going to do relative to the cost of financing. Okay, then we've got the alpha, the outperformance. So you want your investment in this Bitcoin treasury company to outperform Bitcoin. If you want it to outperform by, let's say, 15% annually, then that means that you need to get an entry point that is very low, right? Even at a high level of leverage, right? You need to wait until the market is really offering you a very competitive or a very sound entry point. Because if you go and you buy the stock of the Bitcoin treasury company when it is fully hyped up and it's trading at a 3x multiple, well, optimistically, you might break even versus Bitcoin. But if you sit on your hands and you wait until the hype has passed, and maybe even we reach a trough of disillusionment, and everybody's saying, "Oh, this is a scam. It's a Ponzi. These treasury companies are a failure." That might actually be the time to buy. And that not financial advice, but it's just that's the logic of the market. Is that you have to pay attention to where valuations are if you're trying to outperform. Now, it might be the case that this is in a retirement account that somehow doesn't have access to an ETF, and you can't get the cash out, and so 0% is actually what you're going for, where you're just trying to match Bitcoin's performance, and so you're not trying to outperform it, but it just is going to depend on your particular circumstances. So the path impairment is really about the sequence of returns, right? As I mentioned, if Bitcoin drifts down for a very long time and then spikes up at the end, that's kind of the worst path outcome. What you want is Bitcoin to be steadily increasing in value over the whole time, right? Now, you could imagine that to pay for the dividend yield, the Bitcoin Treasury company could sell Bitcoin, and that would really be harmful if Bitcoin's price is distressed, and so they're selling into weakness to fund their leverage, and that would really undermine your ability to deliver returns. And likewise, if they try to run the ATM at a very non-accretive price level, then they're diluting you, right? And so that dilution is also part of the path impairment that you want to factor into your valuation model. The opposite of this, really, I would argue, is the accretive governance, which is that if the MNAV is at a level, because you have to keep in mind the management and the company are also doing a valuation of their own stock price, right? So the management team has to have a view on, do they think that the stock price, the MNAV, is currently higher than the fundamentals justify, or is it lower, or ballpark fair value? If they think that the shares are overvalued, the MNAV is high, then they're going to issue shares and increase the Bitcoin per share. Vice versa. Oh, I also want to point out that there might be other reasons for them to issue shares via the ATM, right? So, for example, if they know that to access greater amounts of leverage at better rates, that they need to have a certain collateral base, a certain capitalization, then it does make sense to actually issue lots of shares as long as you're above a 1x MNAV to achieve that scale, which unlocks the leverage. Because as I mentioned, the leverage is the number one factor. And so if you're too small to lever up, you're trapped. And I just don't see a great path there. You have to achieve a certain level of scale to be able to access good terms on leverage. Now, on the share buybacks, this one's also pretty controversial. Of if you're trading at a deep discount on your MNAV, do you buy back shares to increase your Bitcoin per share? And I think one of the challenges here is buy back the shares with what? Right. So if you don't have the cash around, you would have to go sell Bitcoin to buy back your shares, which I think could get you into a bit of a spiral where now the shareholders lose confidence. The MNAV doesn't really go up from your buybacks. And then if you have the ability to issue preferreds, then it raises the question of, well, why are you buying back shares instead of buying Bitcoin? Because we're trying to go leverage long on Bitcoin. But if you do that, if you increase your leverage, I'd actually argue that could be a really interesting opportunity, because now your leverage ratio is increasing. And as we pointed out, that being a very important factor, your leverage ratio, that could actually jumpstart your interest in your company and get your MNAV back above 1. And so doing a share buyback increases your leverage ratio far more than just buying Bitcoin when you're, let's get it. All right, we got it. All right. The exit multiple is basically like what's the terminal value for the MNAV. So if you think in 10 years, the MNAV will be 1.2, that actually means that today you'd be willing to pay 2.4. All else equal, right? There's lots of, it's a big multivariable calculation. But basically the intuition being that that matters. And it's also interesting that, somebody could say, oh, I think long-term Bitcoin treasury companies are going to have an MNAV of 1.0. That doesn't mean that today's fair value MNAV is 1.0. There's lots of other confounding factors. And then the cost of financing, right? So you can see here that when you go from 6% to 10%, that doesn't really move the fair value MNAV all that much. And so that's, I think, demonstrates why Strategy has a high willingness to pay on the dividend rate, and that that's not, the biggest factor. Do we have time for questions? Yeah. All right. Let's take some questions. Yes, Tim. On Strategy's website, they share the MNAV, and I've noticed that their number is slightly higher than what I find elsewhere. Do you know what the difference is? There's different methodologies for calculating MNAV. I think the biggest is, do you include the operating business or not, and how do you carve it out? I think that's probably the area that's subject to the most subjective judgment. Yeah, other than just not having the right data, right, which also is a problem. Yeah. Yeah, that's a great question. So the question is, if a Bitcoin treasury company has an operating business opportunity that has a shot of beating the hurdle rate, shouldn't they invest in that? I'd say yes, but they're moving away from being a Bitcoin treasury company and towards being a Bitcoin software company or services company, which brings a different valuation lens to it. One of my more controversial opinions would be to go even further and say that, like, if you look at the big Bitcoin mining companies that have a big Bitcoin stack, I'd argue that they should spin that off. They should sell it and split up the company into an energy company and a Bitcoin treasury company, and that would unlock value for shareholders. But I think that the more gets mixed into the valuation picture, the more complicated it gets. Yes, Ed. Oh, wow. Do I get to speak the whole time? Okay, I can do that. So what's your take on the sub one MNAV company? Is this a grayscale buying opportunity or real risk? Yeah, so I think that one is, the way the operating company can be a liability is if it has a burn rate. And so it is consuming value over time. But right now, I think that what's happening, it really goes back to the expectations that people have for leverage. So they see either the leverage is very slow or it's on bad terms, right? So if you have a convertible note that is secured by Bitcoin and the Bitcoin price is going down and people start worrying about the liquidation of, to meet the covenants for the convertible, then that can be a very dicey situation where, there's distress. The other part of it too, I think, is a timing issue of you've got, everyone saw the success of Strategy, everyone saw the success of MetaPlanet, and then lots of new treasury companies launched. And so there's a supply and demand imbalance of too much supply of levered long Bitcoin exposure and not enough demand at the current moment. which I think creates an opportunity for value investors potentially. But I think that dynamic, plus then the Bitcoin price, right? So if Bitcoin goes sideways, people's expectations of the CAGR just starts collapsing, right? And then if Bitcoin rips up, then their expectations about CAGR expands. And so it's very reflexive to what's going on in the spot market. Yes, sir. So you have to have, I would argue, you have to have the USD part in there because your leverage is USD denominated, and so you need to know, what what's the excess spread in technical terms, yeah. I think it's just a matter of time. These products really started this year. So we're only, I would argue, like 10 months maximum if you go back to like the first ones, STRK. But if you look at STRC, we're months into this experiment. I think on first principles, I think the experiment will be successful. And then it's just a matter of will it be successful over a period of 3 years, of 8 years, of 20 years. And that time frame affects what MNAV you're willing to pay today. Because the longer you think it's going to take for these products to get adoption, then the lower the MNAV you're willing to pay today. I don't know. I'm almost like with my popcorn here as a spectator, but I think that everything takes longer than I expect. Like, when I was first learning about Bitcoin, I thought, well, next year the dollar won't exist because everybody's going to adopt Bitcoin. That didn't pan out. So, but we're making progress, right? So, I'm not sure. Yeah, Tim. Okay, so great question. So looking at today's MNAV versus where you think the exit MNAV will be, the reason why you can actually have a 2x MNAV today at an exit MNAV of 1x and still profit in Bitcoin terms is because the sats per share will have more than 2x'd. And so that's really due to the leverage and the accretive issuance of equity. And so there's a lot of moving parts to that, but that's a great question. Yeah. Yes, sir. Yeah, a great question. So one of two things has to happen, right? So if the whole business model is about Bitcoin's returns being greater than the cost of fiat debt, then either the cost of fiat debt has to increase to where Bitcoin's returns are, or Bitcoin's returns are going to decrease so that spread will collapse, right? And so I think it could happen in both directions, right? Where Bitcoin Treasury companies are taking so much capital out of the fiat system, it's driving up interest rates. Or they're buying so much Bitcoin that it actually brings future purchases forward. Right, and so they're bringing future demand into the present, and so then Bitcoin's price goes up in the short term, but then in the long term, Bitcoin's CAGR will be more and more subdued. And there's on the Bitcoin valuation side, which is interesting because Bitcoin valuation is like a sub part of this equation. You can look at, for example, like Power Law or S2F or whatever other kind of Bitcoin valuation model you want to have that would help inform kind of when you would expect what you're describing to happen, which is the market reaching equilibrium. We could question whether that will ever happen, right? This might just go on forever, but yeah, great question. One more question. Yes, sir. Yeah, that's a great question, and probably one I should have mentioned in here, which is that you could look at, let's say you look at Microsoft and you say, well, okay, as long as the cost of developing the operating system is less than the price that they're selling it to consumers, then Microsoft's going to do great, or operating system companies are going to do great, right? But really, it's all in the execution of, are you looking at a Microsoft or a Red Hat or Apple, right? So like each one's going to execute that basic thesis very differently. And so I do think that the quality of the management team and how they're going about things, what their process of decision making is like, because we're all humans, right? And so we all have flaws, some more flawed than others. And so some are going to stub their toe worse than others as they kind of take on leverage. And, it's really, it's a very nuanced thing, right, where they could get themselves into trouble very quickly because you want to have high leverage, but what if Bitcoin price does something you don't expect, and then you're really having to hyper dilute your shareholders? So yeah, I think that having kind of the qualitative analysis on the management team is crucial to make sure that you're not paying too high of an MNAV. Yeah, I think that was the last question, so I apologize. Yeah, thank you all for joining us today.